What's up, YouTube? I wanted to make a video today about the mortgage industry and how it kind of seems like one of the biggest scams in America right now. I finally found a nice view for you. Yeah, I improved my background here, but I want to talk about fractional reserve banking. And basically, fractional reserve banking allows banks to take money that its customers, deposit into their savings account and loan it out. That's how they make money. They loan it to you for home mortgage loans, or maybe a car loan, or any type of small business loan that the bank gives you. They're using their customers' money that should be sitting in their account, and they're required to only keep about 10% of their customers' money on hand as reserves, and the rest of it they can just loan out. And this causes a number of problems that have led to a real estate bubble, because the people pay interest on their loans to the bank, and the idea is that the bank takes some of that interest and they make their money there, and they can pay interest on their savings account at a lower rate. So the FDIC has certain regulations that banks have to follow, and one of them is that 10% that they have to keep in reserves. So the rest of it they just loan out. And the problem here is when they loan it to, say, you to go buy a house, you're going to take that money and you're going to write a check to the person who owned the house before you bought it. And they're going to take that money and they're going to put it in their bank and cash a check, throw it into their savings account or whatever, and that bank can loan out their money again and only keep 10% on hand. So what's happening is it's essentially creating money out of thin air, or not really thin air, but it's taking money that account holders have and it should be there for them, and it's putting it into other places, such as bad mortgages. And the thing is, when they do that, where are they going to get the money to pay all these back from? So after the bank has loaned out its account holders' money, the recipients of those loans deposit that into their bank account, and their bank can loan it out again. So in order for all that money to still be in one place, or not be in two different places at the same time or whatever, the account holder would still have to get their money back, which would happen by the loan that their bank issued being repaid. But if they can't repay that loan for some reason, and if enough people can't, repay their loan, they are going to run into trouble. That's how we have all these troubled assets, and all these securities that people thought were worth money turned out to not really be worth money, because there's not money there to pay them back. This money was created through mortgages, through putting your money into more than one place at once. It's supposed to be sitting in the account holder's account. And this is the big problem with fractional reserve banking. You can keep doing this for so long as they keep loaning out enough money so that people can pay their interest, they can pay all the loans back, and the account holder can still take their money out of the bank if they need it. But they really have to be putting that many more loans out into circulation for this to keep happening. That's how we had, quantitative easing 1, 2, and 3. And I guess in theory the system's sustainable if you want to keep having inflation, which is going to screw, people who have saved their money over their lifetimes. It makes it worth less and less. And there's really no need for any of this. But so long as banks keep loaning out enough fiat money, which, is only paper, it's not even printed sometimes, it's just numbers on a computer screen, the system keeps sustaining itself and we were able to pay our mortgages. But when the banks stop loaning out their money, there's less money in circulation, and it's like musical chairs. Where's everyone going to get the interest to pay their loan back and pay their interest rates? It's just not going to happen. It's a mathematical fact. And that's why we're in the mess that we're in today. And I think people need to re-examine what they think about, their house, and is it an asset? Is it something that should, count as a retirement, or is it a necessity and something that they, should have a right to, and not be able to be foreclosed upon by bankers that are playing games here? The problem is that if banks are already creating money out of thin air, or spending its account holders' money on other loans or investments, what happens when these investments can't be paid back? If they're poor investments, where are people going to get the money to pay the account holders back if they've already loaned out your money to somebody else who can't pay it back now? And on top of that, where are we going to get the interest? Where's the money to pay the interest on these loans going to come from? That's why we're stuck printing more money, and the system's broken. And when I say the system's broken, we're a society that's dependent on debt. We have to keep having these loans come out in order for this whole thing to work. And it's pretty much made it in effect so that, the banks that issued these loans are rich. They don't have to do anything because we're dependent on them. We're a society dependent on debt. When they loaned out all this money and put it into more than one place at one time, that's why we have this ridiculous housing bubble. That's why housing prices have been inflated so much to the point now where almost everybody is dependent on getting a mortgage. You have to get a loan now to afford a house. I think one of the biggest okay, so what are the solutions? First, if my notebook wasn't blowing around out here in the wind, we would have the answers, but we don't. First, the bailouts. If we're going to bail these banks out, what should have happened is they should have taken the money and, they essentially printed that money, but they should have given it to the account holders who, for whatever reason, the bank loaned out your money and they're having trouble paying it. People aren't paying their mortgages now, so they're having trouble not having your money in the account. This is like a run on the bank type situation. If we are going to print money and have inflation that causes, everyone's dollar in their savings account or whatever to be worth less, we should have just given it back to the people who got screwed by their bank. We should have put more and if we are going to bail out, banks in this situation, shouldn't the people that had mortgages that they can't afford to, pay anymore, shouldn't it kind of acknowledge that, well, the government just picked up your tab here, stay in your house, we paid off the rest of your mortgage? I think that's the way it should have happened, I think. I don't like the bailouts, but it already happened. So that's, if we are going to bail them out, you should have paid off some of these people's mortgages. Or said, we'll put the money back in the account holders who, made bad loans, and these people can keep their house. But at the very least, I think that anyone who's, been in a home where, say, they've already paid more than the house is currently worth to their bank, I think they should be allowed to keep their home. And, maybe the bank should just say, hey, you made a bad investment, you're out of here. But a lot of people have paid, more than their home is worth, and they're just making payments in interest to their banks right now. And it's just nuts, really. It's crazy, but they don't care about you. They don't care, that people are broke spending, all their paycheck just on groceries and mortgages right now. So I just think at the very least, we gave all these banks this money in the bailouts. They should say, all right, some people have already paid, more than their home is even worth. They don't owe us any more money. Keep your home, it's yours. This mess was caused because of our banking practices, loaning out other people's money. The whole fractional reserve real estate bubble. That's why we got into this mess. And they're pretty much just sticking it to customers right now because they're taking the bailout and they're not doing anything. They just have bonuses. Like, this is... And I just think, furthermore, if we said, screw the bank, people that have already paid upwards of 100% of what their house is worth now, they can keep their home. You could say people that have paid upwards of 75% or 60% even can keep their home right now, and actually punish the banks, because all that would happen is they're just not going to get their payments anymore. People are going to keep the extra money and they're going to go out and spend it, in their cities and their towns locally, and it's going to be good for the economy. I used to have a job selling mortgage modifications, and a lot of people out there are just stuck right now paying all their money to just the cost of living, paying that mortgage that can be, ridiculous. And there's programs right now to get that reduced, but the banks aren't even giving people that. And that was another term, with these bailouts. They were supposed to, put people on the home+affordable modification program and things like that, and it's just not happening. And that's why, you have lawyers right now who are going around charging, $3,000, $2,000, $5,000 for a mortgage modification. And it's just because no one's holding the banks accountable to the law that we already passed, and it was condition of them getting this bailout. And I think that's absurd. Like, it's completely ridiculous. The problem with this whole real estate bubble is that, if it's allowed to crash, a lot of the older people are going to lose all the money that they put into their house. And, they've almost seen it as a retirement here. But if it's not allowed to crash, it's kind of sticking it to the young people who, we gave all these bankers this money here, and the prices are still going to be high. Like, I think that we need to allow the market to crash, and I think the most comfortable way to do that is to say, hey, if you've already been in your house, you paid more than 75% of what your home is currently worth to your bank, you own it. Just that simple.